Good morning, good afternoon. It's me, Ryan, waiting for Angie for the Ag Markets Blast. What day is it today? It's Wednesday, the 4th of December. Here she is. Let's hope we don't have issues like yesterday, which was all my fault. I must flag that immediately. Are you there? Hello? I have sent an invite, I'm sure. Yeah, invite sent. Hello? Hello? Oh. However complex the strategy. Hello, can you hear me? Can you hear me? One sec. Let me just send it to copy link. It should work. I can see you there. One sec. Let me see if I can invite you from here. Okay, right. Let's try that again. Send invites. At least set one to everyone then. Right. Invite sent. Oh, what is going on with spaces?
Now we're working.
Yes.
Now.
Perfect.
We are working now. Yeah, it wouldn't let me accept the co-host invite, or if I was, I couldn't hear. It was fun. You gotta love the technology.
Oh, well, this is it. I thought I was going to be a lot better today because obviously yesterday was an outside broadcast, so no idea what happened there.
Oh, it's spaces. We'll just blame it on the technology.
Well, this is it, right? It makes me feel a lot better when things go wrong on my own platform, so that's good. But let me quickly do the legals because obviously we don't want people suing our ass.
Yes.
Nothing discussed in this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Trainers PIQ or PIQ Suite, or indeed the hosts, which, as you should know by now, is myself and the wonderful Angie. And for those that aren't aware, you should be aware by now, but this is obviously the Ag Markets Blast. It's a rapid roundup of the latest pricing flows and market moving news in agricultural markets. And we try and keep this in within 5 minutes, so we're already well overdue. So, Angie, over to you, my darling.
All right. Well, this morning was one of those days where it's like, all right, bullet point 3 is just going to be a potpourri of all of the other things, but I'm, putting the cart ahead of the horse here. So, number one thing that I think everyone is watching right now is the will they or won't they? Are we going to do this or what? Sort of mindset with the 45Z. And so, part of the Inflation Reduction Act that we had seen the Biden administration put out, right, had a lot of tax incentives in it for renewable fuels, specifically, renewable fuels with, in my opinion, or I say specifically, at least in my realm, the big focus has been the renewable fuels that, would be produced from soybean oil, the sustainable airline fuel potentially with ethanol and some of these other things. And so 45Z is supposed to help us get clarification on, the guidance, what that's supposed to look like and what folks can expect when it comes to getting those blender credits. Well, we've been waiting. It's been 2 years now, I think, that they've had the time to put it out. We're waiting on the Treasury Department and a couple others, the IRS, and so, which makes perfect sense, right, for an ag or an energy subsidy. But I digress. Yesterday we had we had a Reuters report come out where 3 different anonymous sources had said, hey, it's not happening. Biden's not going to make it happen. Just, go ahead and hang that idea up. Now, why that matters, right, is the biofuel blender credit that expires at the end of the year is $1 a gallon. So when they're producing these biofuels, they basically are able to access $1 a gallon sort of tax credit. It helps to, support margins and things like that. And so without any type of guidance, without 45Z or without the blender, the blender credit, a lot of folks are looking at pretty substantial hits to margin.
Yeah.
And as a result, you've seen the world, the domestic soy oil end user or the biofuel blender, basically, I read something yesterday from an analyst that I respect that said that they have coverage for like the next couple of weeks. Like the physical short in the soy oil market from the domestic standpoint is pretty phenomenal. Now, if we don't get any sort of tax, information or guidance or whatever, and there's no credit that gets extended, then all right, that makes sense. You're going to see plants go on hot idle, because the margins are poor, and the market will shake itself out. if at this point, I think that's what the market is pricing in. That's what they're thinking, is that we're not going to get any clarification, and that the extension is going to be hard in a lame duck session. And so that's been depressing. However, late in the day yesterday, S&P Global came out and said, yo, we talked to the US Treasury spokesperson, and he was like, chill your jets, like cool your jets, man. Like, we're going to put it out. And so will they or won't they? Are we going to do this or what, is kind of the question that we have at this point, especially because this would be an interesting, and I touched on it in this morning's comments, this could create an incredibly interesting vacuum in the physical market if we were to see the guidance come in and it were to push or keep this sort of biofuel in line, or we weren't, we don't lose the credit and they get in and they decide that they need to get covered. You're going to come head up against this massive soybean oil export book that we have in place that it's going to be fun to watch. Let's just put it that way. And it'll be something that we want to be paying attention to here for the next, hopefully it will have answers sooner than later from the Biden administration, but who knows? So step one, any questions there? Do you have your...
Well, so very quickly, and sorry if this is an obvious one, but so say this doesn't get through and Biden doesn't do anything on this,
Yes.
And it's then left to Trump. What's the feeling if it comes down to Trump? Is it going to be a lot harder to get through, or won't it get through? Or
yeah, right now it seems like a lot of folks, the natural opinion or the natural feel is that it won't get through because of Trump's past administration with biofuels. Now,
right.
Important to remember, the folks in Trump's cabinet this go around are very different than the folks in Trump's cabinet last go around when it comes to biofuels, and the industry itself is far more mature than it was 7 years ago, 8 years ago. But the sentiment is that no, it won't. Like that's the idea right now. And from what I have a few friends, our friend Jordan Fife is the perfect. I reached out to him yesterday and asked, and he had said, basically that there were some plans that he knew of that at this point, plan wise, would be hot idle after the first year if this doesn't get put through, just simply because, they're not going to be able to make it work. Now, most folks, and Senator Grassley said this too, that we're going to see that extension of that biofuel credit. Apparently it's in a bill that's with a bunch of other tax credits that need to be extended and yada, yada, yada. So we'll see. But that one's a little bit harder because the transparency is lacking with the legislature. So it's huge. I mean, it's one of those things where, like, to start the year, the first 2 months of the year here, we've exceeded the U.S. last year's crush pace, by almost 30 million bushels just to get started 2 months into the year. And that is being driven by this biofuel demand. To see that back off, then you would see crush slow and some of these other things. And so super important to pay attention to, and definitely one of those things.
I was going to say, this definitely sounds like one of those things that, like, to a non-ags market participant, and like myself and like many other people that will be watching it or listening as well, sounds like something that it really is never like on the radar. But the more you talk about it, the more, it could have some serious ramifications. Right?
Yeah. And I mean, it's similar to like EUDR, the European Union deforestation regulation, and all of the push that you saw in the cash market ahead of it. And then when they decided to push it back a year, the cash market relaxed and the futures market backed off, and so you just really have to watch what's happening there and what it means for long-term demand. But I am confident that we'll figure something out. I have the faith in it with the industry, but a lot of folks are definitely operating under the idea that we won't, and that's fine too.
Well, you have to plan for the worst, right?
You have to be. Step two, like I said, geopolitical turmoil doesn't mean much. The South Korea thing yesterday was a little concerning because they're a large wheat customer and they buy a lot of corn. But it appears like it was just kind of some anger. I kind of was like, is this what the rest of the world felt like watching January 6th?
Yeah, right. It was. I don't know what the Korean for throw your toys out the pram is, but I think that was it.
That's why I was just like, I don't know what's happening here, but I guess I'm enjoying it. Not enjoying it, that's the wrong term, but it's something that's interesting to pay attention to. And it's just
something a little bit different.
Yeah, it's a better. It took my attention off from tax credits for a minute, so it was something. Yeah. But obviously, geopolitical uncertainty, any uncertainty in a bear market is bearish, right? So like we're knee deep in a bear market in grains right now. No matter how hard we try to shake out of it, and no matter how good demand looks, we're stuck here for now. And so the uncertainty that comes with any of this geopolitical stuff, it tends to be bearish, even if it isn't directly impacting the grain markets, like, South Korea or whatever, was yesterday in depth. What was most interesting though is we had all that the coup talk and everything yesterday with South Korea, and they came in and bought 30,000 metric tons of soy oil today or whatever. Like they were busy yesterday.
So someone didn't tell the grain
yeah,
guys.
the grain guys were like, well, we might as well hammer down. I mean, you're gonna, geopolitical uncertainty is bullish soy oil, maybe, I don't know. But last thing, and it's that's tongue in cheek for sure. Last thing, now that we're way over our time, but what the heck, it's a Wednesday.
What the heck?
The potpourri of other things, and really for me, that I'm going to be watching cash markets. I'm going to be paying attention to what is taking place. Where do we get farmer movement? What are we seeing happen? Like you look at the spreads in corn right now, they continue to come in. Like the March-May corn spread is at an 8-month high. Like that is the least amount of carry in this market structure that we've had in over 8 months. To me, the cash market itself, the way that harvest came off, how quickly it was able to come off, and how we saw spreads kind of continue to firm throughout harvest and basis snapback. This is the quickest basis snapback I've seen post-harvest in my 20 years. To me, I feel like the crop might be a touch smaller than what we're trading on, and so that'll be something that we'll want to watch, because cash does drive futures eventually. Basis, spreads, futures. And right now we've got basis and spreads. We're just waiting to see if futures decide to pay attention or not. So I'm way over, but like I said, what the heck, it's Wednesday.
I think that was good. As we said before, we don't mind going over if we're talking about stuff that's interesting, and especially bullet point 1 most definitely is. So if you missed that bit, definitely go back and tune in for that. Angie, as always, thank you so much. Listeners, thank you so much for coming on and listening to us ramble away. Well, listen to Angie talk a lot of sense and me ramble. And we will see you all tomorrow.
I will be here with bells on.
Goodbye. Bye.